Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the one-day chart. Excuse me, this is the 4-hour chart on Coinbase. And I wasn't going to do an update today, guys, but I've got a couple messages based on the latest price movement, so I'm just going to throw a quick update out there. Last time we spoke, Bitcoin was still trading within a tightening range here, and I told you we were looking at basically two patterns here. We're looking at the larger wedge that Bitcoin is trading within, and then we're looking at that. So we were looking at that smaller wedge within a wedge, basically. And yesterday, as I said, we were watching this this $7,500 base, making sure that did hold. I told you if we did decisively break below 7,500, I think it'd be a very quick drop to at least 7,200, if not if not lower than that. So what happened? We did have this little breakdown from our tiny wedge within a wedge here, and this was, while temporarily bullish, it was, if you're a day trader or scalp trader, guys, this has been a scalp trader's paradise. We've been trading a range here, and we continue to trade that range. Buying the dip into support at 7,500, and then of course selling the top here anywhere between 8,000, 850. So trading this range has been wonderful. Price broke down here, guys. We did end up finding support right around the bottom of our range here at about 60. Let's see, what was our bottom here? 7,506. So basically 7,500 was our bottom. That did hold. Normally, guys, I tell you, by a decisive break, I typically define that as a daily candle opening and closing below. I told you yesterday, guys, I'm looking at smaller time frames here, and I do believe if a 4-hour candle both opens and closes below 7,500, not just wicks below, not just closes below, but both opens and closes below 7,500, I think that's going to be your signal that we're going to be coming down, as I said yesterday, to at least 7,200, as I pointed out, which was the base of this candle here, of our daily candles here on March 18th, March 19th, and that may be a quick scalping opportunity, guys. But honestly, I think that'd be way too risky. You'd be betting on this breakout being a bear trap, and I'm not sure it's going to be this time. I wouldn't play that if I were you, but do what you want, not financial advice. As I said, though, if 7,200 does break down, guys, I think it'll be a very quick drop to at least 6750, which was the prior area that we talked about possibly buying. I would not buy this time, guys. I do not think that it's going to hold if it breaks down here for a third time. I think that, and again, it would be a third time. We tested it once. We came back here, actually broke below, softening up support here, even though the bulls were able to push it back up. But, a third time, guys, and I think it breaks, and I think we're coming down to at least 75, if not 7,400, which, as I pointed out yesterday, guys, that was our area of resistance back here from, for basically, let's see, from October the 11th all the way through all the way through November the 7th. So almost a month there before price broke down to those 2018 lows. So I would expect what was resistance to act as support at 6,500 if we do end up breaking down, guys, and that's a big if. So yes, we had this bearish candle breaking out of the smaller wedge here. That's now that smaller wedge now has been broken, so all we're watching now is our larger wedge here, and that larger wedge is still intact. That being said, coming back here to the 4-hour, guys, I know yesterday we were talking about a possible bullish pattern here. We were talking about a possible inverse head and shoulders. We were looking at this, and we're looking at this possibly coming up and, of course, breaking to the upside here. That is no longer the case, guys. This pattern has now been invalidated with this latest drop. Doesn't mean we can't break up. We are still in this wedge here, which can break up, can break down. So I'm not saying we can't break up. I'm just saying the inverse head and shoulders is now invalidated. So if you guys were looking at targets based on that, which I told you yesterday, which would have been about a $9,600 target, that again no longer valid. Even though I do think if we do end up closing above 84.50, the decisive break above 84.50, as I said yesterday, could bring us up to those $9,600, $9,700 levels. But again, this inverse head and shoulders is no longer in play. All right, zooming out to the daily, guys, looking at our indicators, let's check our MACD. MACD, guys, looks like the signal line is about to cross over the MACD line here. We can see the histogram right up here, guys. We can see that the histogram looks like it may be getting ready to cross into bullish territory, or excuse me, into bearish territory. Obviously that is obviously a bearish sign if that does end up happening. That being said, guys, we could be setting up for some possible hidden bullish divergence depending on how this thing ends up breaking out. So we'll have to wait and see kind of how this ends up playing out, guys. But yeah, but as of right now, guys, looking rather bearish. I'm going to be, if The signal for the larger breakdown, in my opinion, guys, is going to be looking at the daily RSI here, is going to be if we do break down below approximately 54. Really, it's 53.9, and I've pointed this out in the past, but it bears repeating, guys. 53.9 in the past here, guys, was acting as resistance here. Finally, we broke up above it. It started acting as support, and it's been acting as support ever since. So I do think if we do break decisively below that 53.9, guys, not just pushing through it here briefly as we have here in the past, but if we start actually consolidating below, and especially if we break down below 53.9 and come back up and that 53.9 starts acting as resistance, I do think that's going to be your another sign, not the only sign, but I do think that's going to be another sign that we may possibly be in for that larger 35 to 45% correction that we're long overdue for. All right, looking at our indicators on the 4-hour chart, guys. 4-hour, again, this is looking at our MACD moving averages, Bollinger Bands, guys. Bollinger Bands, we're bottlenecking here. Anytime you see a bottlenecking Bollinger Bands like this, guys, you expect a larger move to come. Could be up, could be down, but you do expect a larger move. And anytime you see the moving averages, exponential moving averages, all starting to converge like we saw here, especially when conjunction with the tightening Bollinger Bands here, again, as I pointed out yesterday, guys, does signal a possible larger move to come here. So it doesn't look like we're done quite yet here. We'll have to wait and see. But looking at the larger time frames, looking at here on the daily chart, not quite seeing the Bollinger Bands constrict, really not really at all. On the daily chart, guys, really not much has changed. In my opinion, it's not going to change. The momentum is still bullish until we do break decisively below the 21-day EMA. A decisive break below, again, by decisive, I mean a daily candle both opening and closing below the 21-day EMA. That, again, would be another sign that we're probably coming back down for that larger that larger 35 to 45% correction. Again, looking at longs and shorts, guys. Shorts, basically, they were slightly rising here. Nothing too significant. Small little drop off here in shorts. Again, nothing too significant there. Longs are dropping off here. If this does continue, if longs continue to fall off the board here, especially if price doesn't really move that much more, and longs disproportionately start to fall. In other words, people just start to get, they start to get scared out of the market here. That's going to be a sign, in my opinion, that's going to be a sign that price may end up breaking up. Now, I'm favoring the probability right now is favoring the breakdown, in my opinion, guys. But it doesn't mean that has to happen. And certainly, if longs start to liquidate here, or not necessarily liquidate, but if people just start closing their long positions here without that being in conjunction with price movement, in other words, they're not getting stopped out, they're just getting scared out of the market. Again, I can see that possibly signaling price breaking up. So monitor longs and shorts. As of right now, nothing to make any, they're not showing anything too significant, so I wouldn't base my decisions on longs and shorts at all at the moment, but keep an eye on it, because again, if longs continue to fall, and especially if that is in conjunction with shorts rising, with basically price remaining flat, that's going to be your signal that price is going to end up breaking up. Now, the opposite is also true. If longs turn around here and start to stack while shorts fall off the board here, again, that's going to be your signal that price may end up breaking down. As of right now, though, we just don't have enough information. Longs and shorts are pretty much irrelevant right now. Zooming out on the weekly chart, guys, I know I've shown you this before, but it bears repeating. We can see, again, we're huddled up major resistance here at 8450, 8450. And of course, breaking above 8450 is going to be extremely critical, in my opinion, guys. This is really the, I know taking out this prior, this was obviously critical, taking out the $6,000 area. Really it was more of a range, but let's just call it 6,000. Of course, that was extremely significant. I do believe that basically was our signal that that even though we may have a temporary significant breakdown, I do believe that was your signal that the bull run has begun. I do believe that the last nail has not yet been hammered into the bear's coffin until we do break above 8450. Why do I say that? As I pointed out a couple videos ago, if I come out here to the monthly chart, guys, I say it for numerous reasons. Looking at the monthly chart, that was on the monthly, this was basically our last swing high before we broke down to our low of 3150. Of course, so right there, 8450, that was really our last swing high. And the other swing high on the lower time frames were not, the higher the time frame, guys, the more significant. So the lower time frames, you don't don't even really see them. This was all just a breakdown from our 84.50 swing high on the monthly chart here, all the way down. So this is coming back around here, guys. Yes, you could label this as a possible double top here, and if we get a more significant breakdown here, that would certainly make sense where it is. But even if we do get that more significant breakdown, that 35-45% correction, guys, I do still think that until we do break below 5,000, I'm still bullish overall. I still will believe that the bottom is in and the bull run has begun, but we do need to take out, to solidify this bull run, guys, we have to take out 84.50. Now, it's not just because of this prior swing high here, as I showed you guys in the past here. I showed you that, trying to figure out where bots are trading, you look at all sorts of things, guys, and if I come over here to we're currently hitting our prior swing high here at 84.50. So if I come to the prior one behind that, and I start pulling fibs to kind of see where bots are pulling their highs from, we can see that, let me get right on the tick there. At that 83.2, we can see that this overlaps perfectly. The 84.50 overlaps perfectly with the next fib level. We broke above this the 618, which was significant. The next fib level was the 786, and we can see that it's overlapping almost perfectly there with the 786. So of course, this certainly makes sense that this is that this is acting as a rather strong resistance at 84.50, and it certainly would make sense if we break above it that that would be a very, very significant break above. And it's not just for those reasons. And I know I'm repeating myself, guys, but I keep getting all these questions, and I know some people, you're not watching all my videos, so I just quickly want to run through my rationale for all this in case people had missed it on the prior video. So if I come back out here, guys, and we throw on log scale, and we go all the way back to 2012, what do we see? We can see that we had a trend line that was acting as major support, basically from the end of 2012 all the way until we did finally break down here, down below 6,000. Why is that significant? It's significant because if we look at price here, we can see that price came up and hit literally what was support, now is acting as resistance. So that trend line is now acting as resistance. So why am I pointing it out? I'm pointing it out because this trend line is another trend line, in my opinion, that needs to get broken above. Now this is going to continue to go up here, obviously, with time. So I'm not putting quite as much weight as the 84.50, but nonetheless, it is significant and it is worth pointing out. All right, so zooming back in here to the daily, guys, just to basically sum things up. To sum things up, guys, we're basically still within this this wedge here. We still have not yet broken out, even though we did come back down, test support here down at 7,500. We have yet to break below that 7,500. Again, a break below 7,500 decisively. And again, this time, I mean, even a 4-hour candle, both opening and closing below 7,500, I think will quickly bring us down to at least 7,200. If 7,200 breaks, guys, again, I think very likely we're coming down to at least 6,750, but more likely, I think 65.50 would be would be where price is going to fall to. I don't think 67.50 is going to hold. To the upside, as always, guys, if this thing does break up, we're going to be watching for the possible bull trap. We need to get above 84.50 decisively. By decisively onto the upside, I mean a daily candle, not the 4-hour this time, but the daily candle, both opening and closing above 84.50. If that does happen, guys, there's just not a whole lot of resistance until we get up to approximately, until we start to get into this price range here, which sits at about 90, as I said yesterday, 9,600, and goes all the way up to approximately 10,000. Obviously that's good psychological, but really it's about 99.50 will be the top of this swing high if we do take out the 84.50 swing high. So yeah, not a lot of resistance. If we do get a daily candle opening and closing above 84.50, I think it could shoot up very, very quickly. That being said, if that were to happen, I still would be expecting a larger 35 to 45% correction, guys. I mean, just looking at the weekly chart here, guys, if we zoom all the way out here, there's just, we are long overdue for that larger 35 to 45% correction that we've had every single time Bitcoin has had a parabolic move like this. So, is it going to happen right now? Are we going to have one more leg up? We'll have to wait and see. I think we'll know here soon enough in the next, certainly within the next week. I personally think within the next few days as we break out of this wedge, we're going to have a very good idea if we're going to be coming back down for that larger correction or if we're going to have one more leg up before we have that larger correction. So I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe. Take care of yourselves. This is Working, signing out.